Welcome to the monthly real estate and mortgage market report for April 2023. I am just going to try to make this as simple as possible so that the topics that matter only real estate to real estate. So there is a graphic that explains housing demand based on rate changes. Looks like 6.5% dividing the line between red and green. 45 days ago, the average 30-year fixed mortgage was around 7, now below 6.5%, which in turn shows creating a good demand environment and causing a lot of people are out shopping again. I think Sam Kader from Freddie Mac give us a great perspective on this. He said the turbulence in the financial market is putting significant downward pressure on rates, which should benefit borrowers in the short term, and he is absolutely right. Now let's talk about affordability. Lower rate makes homes more affordable. Some people think only way homes will become more affordable is if prices come down, but I don't believe that to be true, because there are three factors that influence affordability. They are prices, they are interest rates, and they are wages. Let's break down what's happening right now with home prices. A year ago, last fall, a lot of our pundits, the so-called pundits in TV and papers, saying home prices could fall by as much as 20%. And a lot of people started to believe that and got scared, and some people still waiting for their price come down so that they can buy houses, but it never happened. If we look at Case-Shiller home price appreciation year over year, look in the top 20 cities. We see a lot of green in the top 20 cities. This graph comparing year over year, January of 2023 to January of 2022, you can see national appreciation of prices over the last year is at 3.8%, almost 4% appreciation. It is nowhere near what all those headliners say last year and year ago. Look at this graph. According to FHFA, FHFA stands for Federal Housing Finance Agency. So FHA controls basically all the guidelines of mortgage banks. So according to FHFA, year over year, nationally home prices up 5.3%. So what many pundits talk to you about, we don't see that happening. We now have proof of that year over year. As per Black Knight, home prices nationally are now down 2.6% from their 2022 peak, and down 2.6%, not down 20%. Not anywhere close to it. Moody's Analytics repeat sales home price index are down by only 2% from their peak from last July. So again, nowhere near what was said. Freddie Mac, that is the national home price index, is down only 2.5% from its June 2022 peak. So you can see nowhere near what some of the headlines, what some of the doomsdayers said last fall, what happened in real estate. We have seen only 2 to 2.5% appreciation in residential real estate. And I think the case could be made that the worst of that behind us. Headlines often do more to terrify people than to actually clarify what's happening. Now, let's talk about affordability in real estate. What is happening to affordability across the country? The biggest is, will the affordability improve this year? Will I able to afford a home mortgage if I buy a house this year? That is the biggest question. Will I afford it if I buy a house this year? That is everybody's mind. To answer that, we can see that we definitely in a very rate sensitive environment right now. And I think the common misconception about affordability is that prices have to go way up or way down to really move the needle on affordability. And that's just not truly the case. Now, it's important to understand, how do you measure affordability? Well, so it's a combination of three things: prices, rates, and wages. And when you put those three factors together, that's what gives us that affordability equation. And right now, we are in that rate-sensitive environment, and that's been the biggest driver of how affordability has really shifted over the past year. But also, we are seeing wages increase. So there's a lot of things that kind of go into this equation to how do you measure affordability. We can easily say that each downward tick in mortgage rates is met with increased buyer demand, as many eager home shoppers take advantage of the slightly lower cost of financing a home. So as we see a little bit of that easing in mortgage rates over the past few months, that little bit of coming off that high rates and that turbulence in the market, that is impacting, and more people are able to afford financing a home. It costs less to finance that loan because as rates adjust, that's what happens. And so what I want to show you is how that's impacting affordability is improving. Now hear me loud and clear. We are not out of the woods. I am not saying that affordability is no longer a challenge, but we are definitely seeing it move it in the right direction. So let's take a look at that. Home ownership affordability year over year declines that we have truly seen since the beginning of 2021. January 2021 to January of 2023. So a 2-year period where this is no surprise to you, it was more affordable to buy a home in year January of 2021 before mortgage rates ticked up significantly than it was come last fall. But what do we see right now? We see that moving in the right direction. Those lighter red bars over on the red coming back up, showing that affordability is improving. And again, that is largely due to increasing wages in the rate-sensitive environment when we see mortgage rates easing off their peak. It was more affordable to buy a home before rates more than doubled last year. We saw that affordability decline throughout the year, and now we see it moving in the right direction. The good news is we are starting to even, over the past couple of weeks, seeing mortgage rates ease back into those levels. That's largely due to the financial turbulence. So rate-sensitive environment truly impacting affordability right now. When we talk about affordability, we also want to talk about monthly mortgage payments. So let me break down this data for you as well. At the end of the day, someone who is April 2023 purchasing a home needs to be able to make their monthly payment. Bottom line, that's essential if they are going to buy a home. Now, that was much easier to do in January of 2021 when it was much more affordable to buy a home. We saw that creep up very significantly over the past couple of years. We are seeing some home prices increasing, but now that we are seeing mortgage rates easing, we are seeing more neutral home prices, moderation in home prices. We are seeing wages increase. That monthly mortgage payment is coming back down. We are easing off that peak. And so when every percentage point counts in a mortgage rate, every dollar counts in a mortgage payment. This is really important news, really important information to be able to share with you. We can see how things are changing, because if someone don't qualify for a mortgage or couldn't afford that median monthly payment back last fall, maybe they can now. Big question, can I buy a home right now? Should I buy a home right now? Understanding affordability is really, really essential, because if they are only looking at prices, then they may not understand the whole picture. So let's talk about median threshold income versus qualifying income. I love this graph because it really starts to show how this is so hyper-local. We know that mortgage rates and wages are our primary drivers, but we also know that prices are doing very different things in different markets. And so when we talk about affording a home, this becomes really powerful. So what you are looking at here is the blue bars show median income in each region of the country. So those are in the blue bars. We have the US total savings over on the far left. Now the other bars, the green and the orange and the red, that's qualifying income for a median price home. So what pops out to you as you look at this? Immediately my eyes go to that red bar over on the right. It is much more expensive to purchase a home on the West Coast, the places like California. That is in some of the other markets. So a median price home, people on the West Coast on average, not making the income that it takes to qualify for a median price home mortgage. That's really challenging in some of those markets. And we have seen prices accelerate more in some markets than others. This was biggest pain point in different regions of the home. Now, if you look at places like the Midwest and in South, it's the opposite. So those making the median prices income should be able to qualify for a mortgage on the median price, so very, very local. Market is all over and very different around the country. That's why you need a local expert right here in our market, especially in our New York City market. And I can help you understand exactly what's going on here. So being that local expert to guide you is a must, mission critical. Now let's take a look at one more piece. And this is the mortgage payment to income ratio. And it goes all the way back to 2000. This is put together by NAR. And their recommendation is that when someone purchases a home, that they spend no more than 25% of their income. So that's the bar that you see going across the middle of the screen. That 25% threshold, now what do we notice as we look at this? For a long period of time, we were under the 25% threshold. Homes were more affordable, and people should spend less than 25% of their income to purchase the median price home. Well, what do we know last fall? We ticked up above that threshold, so it became more challenging to buy a home. However, what I see as I look at this again, moving in the right direction, we have come down off that peak. Underneath the threshold again, we are not out of the woods. It is still challenging and not as affordable to buy a home as it was a couple of years ago. But we are moving in that right direction, and that's what's important to share with you, friends. Keeping our eye open is very important, because some of those turbulence moments are making home buying more affordable. And for those who are ready to step in and ready to purchase a home, I am here to explain your unique situation and how your affordability works. So, as we wrap up today, friends, I want to finish with one question for you. We are going to finish on a thought, and it's, what is the one thing that could stand in the way of your success this spring to achieve your American dream and be a homeowner? And what I believe is that your mindset is very important. There are challenges, no doubt right now. What's happening with mortgage rates? What's happening with prices? Inventory is a challenge. There are so many challenges in this market right now that we can't control. However, What we can control is our mindset. And if you are able to step up and step in and lead in this space and be that confident home buyer who is educated about the current local real estate market, what you believe you can do in this movement will determine your success this spring. Control what you can control. And your mindset is definitely one of those things. So I hope that you have found this helpful. I hope these visuals are something that you can gain some knowledge from. As always, it's been a pleasure to be here for the monthly market report with you. We'll absolutely see you back here again next month. And thank you so much, friend. Remember, I am your local mortgage expert and I'm your local real estate expert. Years and years we are in this business. So please give us a call. Any question you have, I'm always available for you. All the best, my friend. Take care. All the best.